没做这个女儿，我也不配永远成为你的妻子。做一次工作了，老师。
I lost 900,000 in 3 days. My wife's divorcing me. China's stock market is wreaking havoc on investors. What is going on? Didn't you brag about the coming of a bull market 2 days ago? Has a bull market come? Is that all for today? Will we new investors suddenly become old investors? This stock market guy is really confused. In 3 days, he lost money for 3 days straight. He lost nearly 900,000 in just 3 days. I don't want to live anymore. All we saved is hard-earned money. I lost so much in just 1 day yesterday. Now my wife is divorcing me. I am just one step away from leaving my family behind and having them leave me. Before the National Day holiday, Beijing authorities used policies to drive the stock market to soar, attracting millions of novices to the market, mainly those born after 2000, many of whom are college students. However, after the National Day holiday, following a brief one-day rise on the 8th, the stock market plummeted on the 9th and continued to fall until the 11th. Shareholders howled. In an attempt to boost the stock market, the Chinese Communist authorities even introduced insurance funds and pension funds into the stock market. Scholars have criticized the move, arguing that using people's life-saving money to drive up the risky stock market is simply risking one's life. A-share market turmoil. A Hunan stock investor has only 336 yuan left after 8 years of stock speculation. Recently, China's stock market has rarely risen after years of continuous decline, triggering a carnival in the market. But good times don't last long. Recently, A-shares have plummeted, causing many stock investors to suffer huge losses. A stock investor in Zhuzhou, Hunan, is one of them. The 600,000 yuan he invested in stock speculation over 8 years is now down to only 336 yuan. He believes that stock speculation is not as simple as imagined. On October 10th, the main A-share market was shaken again. After the opening, the Shanghai Composite Index fluctuated and fell, turned green for a time, then rebounded and fluctuated and fell again in the afternoon, with the increase significantly narrowing. According to the Daily Economic News, as of the close of A-shares on the 10th, the Shanghai Composite Index closed up 1.32%, standing above 3,300 points. The Shenzhen Component Index closed down 0.82%, and the Chi-Next Index closed down 2.95%. The declines in major financial, real estate, semiconductor, and other sectors were the largest, with nearly 2,300 stocks falling across the three markets of Shanghai, Shenzhen, and Beijing. Recently, the A-share market has continued to rise with the help of the authorities. On October 8th, A-shares suddenly fluctuated and took a heavy blow on the 9th. On that day, more than 5,000 stocks across the market fell, more than 3,000 stocks dropped by over 9%, and 854 companies' stocks hit the lower limit. At present, A-shares have become a hot topic of public opinion for many consecutive days. Public opinion has pointed out that the facts of the Chinese stock market show that small and medium-sized retail investors are always the ones to be cut like leeks, and cutting losses and leaving the market is their ultimate fate. On October 10th, the Zhuzhou Evening News reported a case of a man who suffered a huge loss in stock trading. The report said that at around 1400 hours on October 8th, in a furniture factory in Guangzhou, Wei, pseudonym, who had been busy for 6 hours, used a short break to open his stock account. The profit and loss column of the account for the day showed negative 197 yuan. The account opener of Wei's stock account was not himself but a relative, so strictly speaking, Wei was only the trader of this account. Of course, the money in the account was paid by Wei himself. In December 2021, his stock account was deactivated for various reasons, so now he can only borrow other people's accounts to trade. On October 2nd, he took a green train from Guangdong to his hometown in Zhuzhou, Hunan. The next day, he invested another 15,600 yuan in stock trading capital into the stock account through his relative. Due to the downturn in the home furnishing industry, Awei's salary has dropped from more than 7,000 yuan in previous years to over 4,000 yuan. After deducting living expenses, rent, and children's tuition fees, Awei has only saved 16,000 yuan so far this year. After reserving 400 yuan, he transferred all his property to the stock market. Although his relative repeatedly dissuaded him, Awei still did not hesitate. At the beginning of 2022, the total funds in this account were 50,000 yuan. Before Awei invested 15,600 yuan, there was only 336 yuan left in this account. In other words, over the past 2 years, Awei's loss rate in stock trading has been as high as 99.3%. Before that, Awei had lost 550,000 yuan in stock trading. Awei is from Lukou district and used to work in the decoration industry in the city. In simple terms, he is a decoration gorilla plus contractor. During the peak of real estate a few years ago, it was normal for skilled workers like him to earn more than 100,000 yuan a year. In 2016, by chance, Awei entered the stock market. Awei believed he had a talent for stock trading. At first, Awei's stock trading went smoothly, but the good times did not last long. From 2016 to 2021, he lost a total of 550,000 yuan in stock trading, and even a commercial house of more than 110 square meters in Tianyuan district was sold by him at a low price of more than 300,000 yuan. Since 2022, Awei's investment situation has not improved. Until before the 11th this year, he was still losing money. Awei said, "I invested all the money from selling my house and borrowing hundreds of thousands of yuan from the bank into the stock market and almost lost all of it. If you have never traded stocks, it is best not to enter the stock market." Awei said that the stock market rose sharply a few days before the National Day, and among the investors who opened new accounts, Post-00S and Post-90S accounted for more than 70%. In this regard, Awei expressed his concerns. He believes that stock trading is not as simple as imagined, and it is very difficult to make money in the stock market. He hopes that stock investors must remember the saying, "The stock market is risky and investment should be cautious." In another situation, because of the large number of personal bankruptcies, bank bankruptcies, and corporate bankruptcies, the storm is coming, and it could shake the CCP regime. This reminds people of the recent A-share wave. Many netizens believed the government's propaganda and invested huge sums of money in stocks. However, since October 8th, A-share institutions have fled in large numbers, with an even larger sell-off on October 9th. A large number of stockholders are extremely desperate. Some people who originally had savings have instantly become bankrupt and even owe millions in foreign debts. 2 individuals suspected of helping the CCP promote and persuade people to buy A-shares are being frantically searched for across the entire internet. First, an uncle in Shanghai was reported to have been beaten. Another financial blogger, Dalan, persuaded people to fully invest in A-shares, but his account with 10 million followers has been blocked and the original video deleted. Many deceived bloggers drove directly to Hangzhou to find him and filmed videos calling Dalan out.
As the Communist Party of China calls for living a tight life, 2 sources familiar with the matter told Reuters that employees at the Beijing branch of China Minsheng Bank have faced salary cuts of up to 50%. As part of broader cost-cutting measures, Minsheng Bank has also stopped paying certain work-related expenses and other benefits at its Beijing branch, which is the bank's largest branch, employing over 4,000 people. The 2 sources, who requested anonymity, said these measures have been fully implemented at the Beijing branch, but it remains unclear if similar measures will be applied to other branches. These salary cuts, up to 50%, are the largest among China's major commercial banks in recent years. Minsheng Bank and China's banking regulator, the National Financial Regulatory Authority, NFRA, have not yet responded to Reuters' request for comment. Living a tight life. According to the BBC, the Communist Party of China promoted the slogan, "Living a Tight Life," in 2023 in response to fiscal revenue shortages as China's economy slows and shows weak recovery. governments across China have issued regulations to align with Beijing's call, with civil servants bearing the brunt as salary cuts began last year. Financial institutions, both state-owned and private, have followed suit, implementing measures such as cutting salaries and bonuses and encouraging employees to avoid wearing expensive clothing to work. China Construction Bank, CCB, the country's third-largest commercial bank by assets, asked its head office staff to reduce their salaries by at least 10%, Reuters reported in July. Reuters also reported earlier this month that China Merchants Fund Management, one of the top 10 fund managers, asked senior executives to return compensation that exceeded a new cap imposed over the past 5 years. Minsheng Bank's salary cuts reflect concerns over profitability. Chinese lenders are under pressure to reduce loan costs as the economy grapples with a prolonged real estate crisis and teeters on the edge of deflation. Official data shows that Chinese banks' net interest margin fell to 1.54% at the end of June, a record low. Minsheng Bank, a second-tier joint stock bank, had total assets of 7.7 trillion yuan, $1.1 trillion, at the end of last year, ranking 11th among China's approximately 4,600 banks. Founded in 1996 as China's first privately controlled commercial bank, Minsheng Bank has been severely affected by the ongoing real estate crisis. The bank is a major creditor of China Evergrande Group, which is at the heart of the country's real estate crisis. Minsheng Bank has also been impacted by the financial troubles of one of its largest shareholders, developer China Oceanwide Holdings Group Co. Ltd. Minsheng Bank's net profit fell 5.5% year-on-year in the first half of this year, while the non-performing loan ratio for its real estate loans rose to 5.29%, up from 4.92% in 2023.